this. So that will be cost volume profit analysis. Cost volume profit analysis is that how the sales, number of units that we're selling are related to our profit. Obviously, there has to be a relation between the volume that we're selling, cost that we're having to incurring to get that volume, and the profit. So now let's see, this chapter, we're gonna see how this is gonna work. We're gonna analyze the change. What's gonna happen if we change the cost? What's gonna happen if we change the volume that we're selling, and how the effect is gonna be directly on the profit? You understand, obviously, that this is critical for the company, and that's gonna help us to interpret 5 components of this analysis. First one will be the sales in terms of total sales and in terms of units that we need to sell. Second is going to help us for the unit cost per one item that we're selling, and obviously the selling price for that item. Then we're going to check that cost for unit, and the cost for unit, we're going to have a variable cost, which is direct cost related to the products that we're producing, and then we're going to have a fixed cost, which will be related to some other costs, most likely manufacturing costs, which is directly related to our product. And the last thing that we're going to see is if we're selling more items, how that sales is going to affect our profit. That's what that's what we're aiming for. Before we do that, we have to make some assumptions. First, for the cost and the revenue, they are always going to behave in a predictive way within the relevant range. We already established relevant ranges, range of activity where the costs don't change. The same thing we're going to apply now for the sales price. The sales price don't change. The second thing that we're going to do is we're going to get all the costs and we're going to split them only and only by variable and fixed, nothing else. Make sense? That's what we're going to do with those. Next thing that we're going to say is the changes in activity will be the only thing that's going to affect the cost, nothing else. We're not changing the selling price, we're not changing the variable cost, we're not changing the fixed cost. All is going to stay the same. And the only thing that's going to start driving the cost is the number of units that we're selling. We're not going to build the inventory. We're going to sell all the products that we're producing through the period when we're doing these calculations. And if we have to sell more than one product, the sales mix of those products is never going to change. So now, how are we going to do this? First, we have to prepare a special income statement to serve our needs. What will be that income statement? Well, first we have to see what was the normal income statement, and then we can see how we're moving to that income statement, to the income statement that we need to do this analysis. It's very important analysis, very interesting analysis. Just stay with me and I'm going to explain you step by step. And I hope you're going to understand, and I hope you're going to use it one day for the purpose that you want to use it. Now, for that reason, I have to move from the slides and I'm going to go to the Excel spreadsheet. Let's go with this Excel spreadsheet. and we're gonna start thinking something. Before we do that, what was the product cost? Can you guys see my screen?
Yes, sir.
What do we have in product cost? Somebody to tell me, please.
Um, Variable cost plus
No, no, no. I want to produce a product. What do I need?
Raw material,
I need the direct material, I
direct
need
labor
the direct
direct
labor,
labor,
and I
and
need
raw
manufacturing
material.
overhead. Make sense? So now remember how we're calling those two and how we're calling those two, right? That will be the tricky part next time. Or not next time, on your next quiz. So once we know that, let's see how we're gonna make a profit. So far from financial reporting, what we learned? We learned that we have sales or revenue or slash sales. Then we're gonna have cost of goods sold. Then we're gonna have gross margin. Now, gross margin is simply calculation. It's a simple calculation, sales minus the cost of goods sold. Give you the gross margin. Then we're gonna have operating expenses. And then we have the last calculation that's gonna give us net income or operating income. Let's go with operating income. So operating income is again calculation between the gross margin and operating income. Or operating expenses. Gonna give you the operating income. Now, what we're gonna do here is we're gonna pull out the cost. We're literally gonna take these costs, gonna pull them somewhere, and we're gonna get those costs as well. I'm gonna take them out from here, and we're gonna see how they behave in terms of variable and fixed cost. Let's say, so we're gonna get cost of goods sold, we're gonna get the operating expenses, and the only way they can behave is as a variable cost and as a fixed cost. That's it. That's the only option they have. So, and then we're gonna prepare a new statement, and then the new statement's gonna have, we're gonna still start with sales. Then we're gonna have variable cost, and that's where they come our first calculation. Once we get those two, next thing that I'm gonna call it is contribution margin. Then I'm gonna deduct the fixed cost, and whatever left is gonna be operating income.
Professor.
Yes,
Can you repeat this again from the sales?
from the sales. So
Yeah.
first we're gonna have a financial statement from the financial reporting, which start with sales, cost of goods sold. Then we have first calculation. This minus this is gonna give you a gross margin. Once I deduct the operating expenses, it's gonna give me the operating income. Make sense?
Yes. Yes,
We already
Professor.
know. We already know that. So now, what I'm gonna do is I'm gonna get those cost of goods sold. I'm gonna get those operating expenses, and I'm gonna start chasing how they behave. And they can behave only two ways. Either it's gonna be variable cost, either it's gonna be fixed cost. There's no other options here. Just to make it simple. Once we do that, same thing, we're gonna prepare it again. Now, don't get me wrong here. If, for example, watch this. If, for example, here I start with 100, my cost of goods sold, let's say, are 20. My gross margin is 80 now, because that's simple calculation. Operating expenses, let's say, is 40. No, let's go with 60. My operating income is $20. Once I put once I put that information and plug it here and see now I have those 20 and those 60, the total cost here is the total cost that I have to play with is $80, correct? When I combine those two, the total cost here is $80. Make sense?
Yes, Professor.
So those two are only and only $80 because those are the same costs that's coming from the other section. Make sense? So now the question is, since those are 80, how much of those 80 are variable cost and how much of those 80 is a fixed cost? So the sales gonna stay the same. I cannot change the sales. I cannot change the operating income. Operating income always gonna be 20. Those two I cannot change it. Now what I'm gonna change in the middle? Let's say now the variable costs are 60. Let's go with 40. My contribution margin now is 60. How much left to be my fixed cost? 40. Make sense? Do you understand this logic? That's how we're moving from the traditional income statement. This one is called traditional income statement. And this one is called contribution margin income statement. And this one is the one that we're using for management purposes. Now, for
Professor?
management purposes, so now let's build on this. So far, so good?
Professor, can you do like one more time the calculation, please? I didn't understand.
The calculation.
Yeah.
Which one?
For this contribution margin.
For the
Like,
contribution margin. It's the same logic, right? Sales are the same. Operating income is the same. What we're changing is instead of gross margin, we're going to have a contribution margin. So how are we going to get the contribution margin? Sales minus variable cost. We're going to give us contribution margin. Contribution margin minus the fixed cost is going to give us operating expense or operating income. Make sense? So as you can see, in both cases, I'm not changing the cost. Variable cost and fixed cost are equal to how much are variable cost and fixed cost? Can you see them?
Yeah, 40.
40 is the variable cost, fixed cost is 40, so how much is the total?
80.
80.
$80. Here I have cost of goods sold and operating expenses. How much is the total? If I have to give you the total right here, how much is my total here?
It is 18 too.
80 again. Am I changing the cost?
No,
No. Am I changing my sales?
no,
No.
same.
Am I changing my operating income?
No,
No.
no,
What
same.
I'm changing the way I see the costs. I'm changing my cost classification and moving them only on the way they behave. That's all. That makes sense?
Yes, sir.
Okay. So now let's focus on this and only on this. Now let's pretend that I'm selling only one product. The number of units that I'm selling is only one. That's how much I'm selling. So I'm going to have obviously sales price per unit. I'm going to have a variable cost per unit. Then I'm going to have a contribution margin. And then we're going to have a fixed cost. And then I'm going to have the operating income. So far, so good?
Yes, Professor.
Okay. So now let's pretend we're selling only one item and one item only. And let's stay with this. My sales price is $100. My variable cost, let's make it $60 now. I'm changing this information. As you can see, I'm changing instead of here 40, I'm moving 60. My contribution now is how much?
40.
$40. Now let's say fixed cost because I'm selling only one product, but I don't want to sell one product. Let's say my fixed cost for the company, for the entire company, let's say is $1,000. I'm looking for some bigger number here for the purpose of this exercise. I need some big number of $1,000. Now the question is, how much is my operating income? Am I having operating income here?
No, sir.
No. What do I have? Operating loss. How much is that?
960.
$960. I'm losing. We're losing. Why? Because we're selling only one product. So what we can see from here, I can see that my operating income or the profit, operating income, or on the other side, the profit is equal to what? How can I get the profit? What do I need in the beginning?
Contribution margin.
No, yes, I need contribution margin, but before I get contribution margin, what do I need?
Sales.
Sales. If you don't sell, nothing's gonna come. After you sell, what you have to cover with the sales?
Variable cost.
Variable cost. And I have to also cover
Uh,
Fixed cost.
fixed cost. Once I cover those two, if the sales are more than variable and fixed costs, I'm gonna have profit or operating income. In any other cases, I'm gonna have loss. Can you see it?
Yes, sir.
So what do I need to do? Now I need to start, obviously selling one product, that's not gonna help me. I need to start selling more. The question is, how many units I need to sell? I need to sell in order to become profitable. Makes sense? That's what we're chasing here today. How many units I need to sell to become profitable? Before we do that, let's do one exercise here. What's going to happen if I sell 2 units? Let's stop for a second and start thinking about it. What's going to happen if we sell 2 units? Now we're not selling one, we're selling 2. How much will be my sales now?
200.
If I know that if I'm selling 1 unit, that's what's happening. I already know. Once I'm selling 1 unit, that's what's happening with me. Now the question is, if I sell 2 units, what's going to happen? How much will my sales now?
200.
200. Variable cost?
120.
120. How much is my contribution margin now?
60. 80, sorry.
$80. Fixed cost?
It
They're
remains.
fixed costs. They're going to stay the same, right?
Yes.
What's going to happen now with my operating income? So now let's see. Let's observe what's happened with the operating income.
The loss has decreased.
Increase or decrease now? What's the difference between one operating income and the other operating income?
It has decreased. The loss has decreased.
Loss has decreased, right? Before I was losing $960. Now I'm losing only 920. How much the loss decrease?
40.
This one minus that one. Let's see if this is gonna give us. It decreased with $40. That's not the one. Let's make it positive. Increase with $40. My loss decreased with $40. Why with $40? That's the question now.
So, Professor, I think when we produce more unit, the loss will be less.
Yes, obviously. But the question is how much less? So now I'm seeing that my operating loss decreased with $40. The question is from where these $40 came from? What's the increase in my contribution margin? How much
40.
my contribution margin increase?
40.
Can you tell me?
Yes, sir.
$40. Why increase with $40? Why my contribution margin increase with $40?
Because there's an increase in sales.
Increasing sale with how much?
100.
From where that 100 came from? From the increase of with one unit, correct?
Yes, sir.
So if I sell one more unit, my sales gonna increase with the sales price of that unit. My variable cost gonna increase. So my sales gonna double. My variable cost gonna double, but my contribution margin also double. Make sense?
Yes, sir.
And that helped me on my operating income. So now let's see what's gonna happen if we triple this one. Can you predict what's gonna happen if we triple this? What means triple? How many units I'm gonna sell now? If I
3
want to
units.
triple it, 3 units. So if I want to sell 3 units, how much will be my sales now?
300.
300.
300.
Did it triple?
Yes.
Yes. What's happened with my variable cost?
180.
180. Did it triple?
Yeah.
Yes.
What's happened with my contribution margin?
120.
120. Did it triple?
Yes.
Yes.
It did triple. Let's leave it here. And let's expand this one so you can fit this one. My contribution margin also triple. What's happened with my operating loss?
Decreased by 40.
Decreased with another 40. Can you see it?
Yes, sir.
Okay, so why 40? Because every time when we sell one additional unit, that contribution margin from here, from that additional unit, on the unit level is going to transfer where? If I sell one more unit, what's going to happen? My operating income is going to go up with another $40. Make sense?
Yes, sir.
Yes, Professor.
Can you see it? Can
Yes.
you actually see it? That every time when I sell one additional unit, my operating income is going to go up with exactly contribution margin that that unit gives me. Make sense?
Yes.
Yes, Professor.
Yes, Professor.
Okay, so now let's do something else. So now we know that what's going to happen now. Let's start predicting. What's going to happen if I sell 10 units? Can you tell me how much will be my operating income if I sell? So let's say now I know that for every unit that I'm selling, so listen carefully. I know from every unit that I'm selling, my operating income is going to increase with another $40. Correct?
Yes, sir.
So those $40, as long as we're selling, it's going to move here. Now, can you predict directly how much contribution margin is going to go to me if I sell 10 units? How much will be my contribution margin? Can you tell me?
1200.
Sorry?
It's 1200.
So again, contribution margin. If I sell 10 units, if I know
180.
that one unit give me $40 contribution margin.
400.
If I sell 10 units, how much contribution margin I'm gonna get?
400.
Yeah.
$400.
400.
Can you see that?
Yes.
Now let's
Yeah.
see. If I sell 10 units, how much will be my sales?
1000.
$1,000. How much will be my
600.
variable cost?
600.
600. How much my contribution margin? 400.
400.
So what's gonna happen now with my loss compared to selling one unit compared to selling 10 units?
600.
How do
It's
we
gonna
have
reduce
600?
with how much?
40.
With $400.
400.
Make sense?
Yes.
And that's how we keep going. Now you understand the logic of all those things. So now we found the pattern, how these costs behave. Every time when we're selling one additional unit, the contribution margin of that additional unit is gonna come to us and then gonna move to the operating income. Now what's our objective? To get rid of that loss. Once we get rid of that loss, we already know every unit that we're selling over that loss is going to come to our profit. Now, before we do that, before we start calculation, let's do something else. So sales, we already know from the common ratio analysis is sales is always 100%. Correct? Sales is always 100%. This sales is 100%. This sales is 100%. This sales is 100%. This sales is 100%. Now, how much is the variable cost as a percentage of sales? How I'm going to calculate it? Variable cost divided by sales. How much is that? Can you see it?
Yes, sir.
Now, how much is the contribution margin as a percentage of sales?
40%.
40%. What that 40% means to me? If somebody tells you every product gives you contribution margin of 40%, that means for the every dollar of sales, I'm going to get 40 cents, correct? For every $100 that I'm selling, I'm getting $40. For every dollar that I'm sell, I'm going to get 40%, 40 cents. Make sense?
Yes, Professor.
Yes.
So
Yes, sir.
now, if I sell 2 units, how much my variable cost as a percentage of sales? That will be 120 divided by 200. And how much will be that?
60%.
60%. How much my contribution margin now?
40%.
40%. So how those percentages change when I start selling one more unit? Did they change?
No, sir.
No. So the question is, what will be those percentages if I sell 3 units? What do you think?
It will remain same.
It will remain the same. Are they? Let's double check. This one divided by this one. And then we have this one will be this one divided by sales. And there's the same. So selling more units, is it going to change my ratios?
No.
No. Why not? Because we're selling exactly the same item in the beginning. What we increasing? We're increasing the number of the units that we're selling, but we're still selling the same item. Make sense?
Yes.
So variable cost behave as a variable cost. Per unit stays the same, in total goes up. And because of that, that proportion always gonna stay the same. Sales also the same. Per unit stays the same, in total goes up. What drives the sales? Number of units. What drives the variable cost? Number of units. Make sense? So now the question is, how are we gonna deal with the fixed cost? Now, if I want to predict what's gonna happen in the future, at which point that operating income will become zero. Let's move this one here first, make it consistent. At which point, let's get rid of those. At which point my operating income will be zero?
And when contribution margin is 1,000.
When contribution margin is $1,000. If I somehow magically get my contribution margin to be equal to $1,000, then my sales, my operating income is gonna be zero. So I don't know how many units we need to sell. So what do I need to find out? I need to find out how many units I need to sell and how much will be my total sales. Because if I have my total sales, what do I know? For every dollar that I'm selling, 40% comes to my contribution margin. Correct? I already know that. So if I have this number, I can easily calculate the contribution margin. So, or the other way, if I know how much I want, can I calculate backwards and get how much will be my sales? I can do that too. But let's do this one with formula first. How are we gonna do this? Let's stay with the formula and let's start explaining with the formula first. We already know that profit is equal to sales minus total cost. If we have my sales, and if I deduct the total cost, I'm gonna get my profit. We already know that the total cost is equal to variable cost plus the fixed cost, correct? So if I deduct from, I'm gonna get the profit once I have the sales minus variable cost plus fixed cost, correct?
Yes, sir.
Okay. So we found out from this formula that sales minus variable cost is going to give us what? What can we get once I deduct
Contribution.
contribution margin? That will be equal to contribution margin. And you can easily see it. Sales minus variable cost give you contribution margin. So in order for me, if I want, let's say, if I want my profit, if I want my profit to be equal to 0, that will be profit. If I want my profit to be equal to 0, what I have to make sure? What we said here. Contribution margin to be equal to
1,000.
or equal to fixed cost.
Okay.
Make sense? My profit will be 0 only and only when the contribution margin is equal to fixed cost. Because if we have to continue here on this formula, sales minus variable cost contribution margin, how am I going to get my profit or operating income? What do you have to do? Contribution margin minus fixed cost, right? Minus fixed cost is going to give me the profit. But if I want profit to be 0, then my contribution margin has to be equal to the fixed cost. And we can see it here. The only way my operating income here will be 0 if some magically my contribution margin that generating from my sales is equals to my fixed cost. In any other scenarios, I'm losing money. So the two questions that we have are, first question is, how many units we need to sell? And the second question is, how much should be my sales, total sales? Should be equal to what? Those are my two questions. If I find those two questions, I can bring my operating income to 0. So let's find the answer to the first question, number of units. So for the number of units, we're going to start with this formula. We already know this formula. We know that the profit is equal to sales minus variable cost and fixed cost. Now the total sales will be equal to always will be sales. It's equal to the number of units that we're selling time the sales price per unit. Our sales per unit. Correct?
Yes, sir.
My sales here are 200. Why? Because I'm selling 2 units, sales price per unit is $100. My sales are here $300. Why? Because I'm selling 3 units and sales price per unit is $100. Now, let's think about the variable cost. What's the variable cost equal to? Same idea, number of units time variable cost per unit. Correct?
Yes.
Let's see that. If I'm selling 1 unit, my variable cost is $60. If I'm selling 2 units, my variable cost is 120. Why? Because I'm selling 2 units and the variable cost per unit is $60. If I'm selling 3 units, my variable cost is 180. Why? Because variable cost per unit is 60 and I'm selling 3 units 180. And that's exponentially gonna grow in the same line, in the same direction. So once I know that, what I can say, I can say now that my profit is equal to sales, but sales are not sales. Now the sales we have, sales are number of units time sales price per unit. Sales price per unit. That's not a bracket, that should be numbers. That should be like this, number of units, sales price per unit. And then I'm gonna have minus variable cost is also number of units time variable cost per unit minus fixed cost. That's how we're gonna get the profit, correct? But we
Yes.
also find out that sales minus variable cost is gonna equal to what we're gonna get when we deduct sales from sales we deduct the variable cost. What we're gonna get?
Contribution margin.
Contribution margin. Now, what's gonna happen if I get this part of the formula only this part of the formula, and what this part of the formula is gonna give me? So if I know the sales minus variable cost contribution margin, what will gonna give me if I have the number of units times sales per unit minus number of units time variable cost per unit. What that gonna give me?
Same contribution margin.
Sorry,
Contribution margin.
per. So let's see now. Can I get rid of number of units at front and do the formula inside? Yes. So if I have the number of units time sales price minus variable cost, so I'm gonna have number of units time in the brackets I'm gonna have sales price per unit minus variable cost per unit. Correct? But we already know that sales price per unit minus variable cost for that unit is gonna give me contribution margin per unit, correct? So what I have to find out? I have to find out number of units time contribution margin per unit. And that's gonna give me the total contribution margin, the one that I want. So once I get the contribution margin, what do I need to deduct?
Fixed cost.
Fixed cost. And once I deduct the fixed cost out of this formula, I'm gonna get my profit. Correct?
Yes.
Yes.
Fixed cost, I'm gonna get the profit. But we said we want the profit to be equal to 0. So that means if we want the profit to be 0, that means the number of units that I need to sell time contribution margin per unit has to be equal to fixed cost. Isn't that what we're chasing here? Contribution margin, which comes from the contribution margin per unit time number of units to be equal to my fixed cost. Make sense? So now once I have this formula, can I find out how many units I need to sell? What will be the formula now?
Fixed cost divided by
Fixed
contribution,
cost divided by
contribution unit.
number contribution margin per unit.
Yes.
Make sense? So now the only question that left is this formula actually works? In order to do that, let's test it. That's the only way we can find out is this actually works. The only way is we to test it. So let's go with if we sell in 1 unit, we're getting that much. If we sell in 2 units, we're getting this one. Now the question is, how many units I need to sell in order to bring this one? I don't know how much is this. Let's delete this. Let's delete this. I don't know. I know that $1,000 is here. How much I need to sell in order to bring this one to 0? That's my objective. By using only this formula. So let's flip the formula here and let's start working. Do I know my fixed cost?
1,000.
Yes.
Come
1,000.
on, fixed cost is $1,000. I already know my fixed cost. Do I know my contribution margin per unit?
0.
Yes, we have
How much is it?
40. 40.
$40. So if I have those two, I should be easily calculate the number of units that I need to sell to get this one to 0, correct? Let's
Yeah.
substitute in the formula and let's see what's going to happen now. That will be 1,000. This one will be $40. So how many units I need to sell?
25.
We need to sell this one divided by 40. We need to sell 25 units. And now you can tell me, we don't believe you. That sounds so easy. So what do we have to do? We just have to go here and put number of units, 25, and see, once we run the calculation, are we going to get 0 here? So if I sell 25 units, how much will be my sales?
2,500.
That will be equal to $100 times 25 units, correct?
2005.
2,500. Right there. Can you see it?
Yes, sir.
Variable cost. 60 times 25. 1,500. How much my contribution margin now?
1,000.
1,000. Is that what we wanted?
Yes.
That's exactly what we wanted. How much my operating income now? 0. Why? Because my contribution margin magically become equal to the fixed cost. Now the question is, if I sell one more unit, what's going to happen? Just one more unit. If I sell, let's say, 26 units, what's going to happen now? How much will be my sales? 100 times 26.
2,600.
How much will be my variable cost? 60 times 26. So how much is my operating income now?
40.
$40. From where that $40 came from?
Contribution.
From the contribution margin for one additional unit that we're selling. Make sense? Can you see it?
Yes, sir.
Once we pass the break-even point, every additional units that we're selling, the contribution margin is gonna come directly to our income. So if I sell 2 additional units, how much will be my operating income?
80. 80, sorry.
80, right? If I sell 10 additional units, how much will be my operating income?
400.
400. Let's see if that's gonna happen. If I sell here 36, not, sorry, 10 units is 35, right? If I sell 35, my operating income is $400. Why 400? Because I'm selling 10 more than break even. $40 per unit comes directly to my operating income. Do you understand this?
Yes.
Yes, Professor.
Okay. So now we find out how many units we need to sell. So obviously this formula work. Let's highlight it. This formula, we're going to use it in the future. Now, let's see how much should be my sales in order to get the break even. When we get the profit to be equal, that's a break even. Why is break even? Because sales are equal to the total cost. So now let's go with the sales. How much should be my sales in order to cover all my expenses? What we're gonna do, we're gonna start with this formula. We're gonna start contribution margin should be equal to the fixed cost. Now, can I do this? Contribution margin time 1 is equal to the fixed cost. Am I changing the formula? Did I change the formula, people?
Yes, sir.
How? I add 1. But is that gonna change the result?
No.
No. But can I say 1 is equal to sales divided by sales? Can I say that? If you get sales divided by sales, it's gonna give me 1?
Yes.
If my sales are $5 and divided by $5, how much is the result? 5 divided by 5?
1.
10 divided by 10?
1.
So we already know that number divided by the same number is going to give you 1. But if you time that 1 for the contribution margin, that doesn't change this formula. So now when we're using that logic, let's do this. Let's say now that, let's leave one new line here. We're going to use, yeah, let's do this now. Now let's substitute in the previous formula, and let's go with the contribution margin time sales divided by sales is equal to fixed cost. So did I change this formula with this formula? I did, I add 1, but technically the result's gonna be the same, correct? Are you following me here?
Yes, sir.
If I have 5 equal to 5, and if I do 5 times 1 equal to 5. Is that true?
Yes.
Yes. And if I get 5 times 6 divided by 6 is equal to 5. Is that true?
Yes, sir.
Yes. So we're not changing anything here. We're just playing with the numbers. What's our objective? To find out that something interesting here. So now when I substitute and I do some changes here, I can easily find that I can have contribution margin divided by sales. Time sales should be equal to my fixed cost, correct? From the previous formula here. So, but then I'm chasing, if I get contribution margin divided by sales, what that's gonna give me? That's gonna give me contribution margin percentage. If I get contribution margin divided by sales, that's gonna give me a contribution margin ratio. So now I can substitute here in this formula. And what will be my substitution? That will be contribution margin ratio time sales should give me a fixed cost. Now the question is, can I express now sales? How much will be sales now from this formula?
Fixed cost divided by contribution margin percentage.
Percentage. And I got it. Now we have the second formula that we have to test. And let's go and test it. Because you may say that, oh, that's a very nice formula, but how do we know that this one works?
Professor,
Yes,
can you repeat it from the contribution margin divided by sales?
contribution margin divided by sales is going to give
Yes.
us contribution margin ratio, right? How are we getting it? Well, every time when we calculate this percentage here, what we get? Contribution margin divided by sales. Contribution margin divided by sales. Contribution margin divided by sales. And what we find out? It doesn't matter how many units we're selling. Contribution margin percentage, those percentages always going to stay the same. Why? Because the cost structure per unit stays the same. The only thing that drives the cost is the number of units. So for that reason, contribution margin divided by sales is going to give us contribution margin percentage. And once I substitute this part of the formula only with this, I'm going to get contribution margin percentage times sales to be equal to fixed cost. And now I can express the sales. Make sense?
Yes, Professor.
So now let's use this formula and in our calculation and let's see what we're going to get. In order to do that, I have to insert some lines here, right? Let's get those lines. And let's start working. Where is our formula? Our formula should be here somewhere. Okay. We already know 1, 2, 3 units. Now the question is, how much should be my sales? That's what we're chasing. How much will be my sales here? Do I know my fixed cost?
Yes, 1,000.
$1,000. Do I know my contribution margin ratio?
Yes.
Yes.
Yes,
40.
I know it. 40%. What do I have to do? I just have to substitute it in this formula. And once I substitute in this formula, I should be able to get the result. 1,000 and contribution margin ratio is 40%. So how much is my contribution margin now? My sales, how much should be my sales? Is that the number that you're getting?
Yes, sir.
Okay. So let's see. Now, if my sales are $2,500, what else I know? I know that my contribution margin ratio is 40%. How much will be my contribution margin now? 2,500 times 40%. That's $1,000. Is $1,000 enough to cover my fixed cost?
Yes.
Yes. So I got it. What that means? That means this formula also works.
So this is only to find the break-even point, right?
The break-even point, yes.
Okay, sir.
So now, the question is, that's a very good question that you're asking me. Now the question is, do you want to stay in the break-even?
No.
No. What do you want?
Profit.
Profit. Question is, how much profit you want?
As much as
Hmm?
as much as we can gain.
As much as you can get. I know one person here wants, what was that? 1 million profit per day. But let's stay with the normal numbers so we can do the calculation. Let's do, let's stay. Give me some numbers more reasonable. We can use in our calculation right now. How much profit you want? From 1,000 to $10,000.
8,000.
8,000. So if I want 8,000, I want my profit to be equal to $8,000. That's how much we want. And let's use this formula. Now, we know this formula is at the point where the profit is equal to 0, correct? So what that means is, that means my contribution margin is equal to my fixed cost. That means that contribution margin minus the fixed cost is equal to 0. But now, I don't want to be 0 anymore. I want to be 8,000. So what do I have to do? I need contribution margin minus my fixed cost to be equal to $8,000 now. So what do I have to do? If I flip the fixed cost on the other side, what's going to happen? Contribution margin should be equal to fixed cost plus
8,000.
8,000. So what we're still gonna use this formula, don't get me wrong, but we're gonna make a slight adjustment. We're gonna add to the fixed cost the profit that you want. That will be the only adjustment that we're gonna make. Every time when you want profit, add it to the fixed cost. So let's use the formula now. Where we're gonna use it? Let's use it and let's get our example from here. Not from here, from here at this point. That we get the break even. And flip it there. Do I know my fixed cost? Yes. Do I know my contribution margin per unit? Yes. Do I know how much profit I want?
Yes.
$8,000. So what do I have to do? Substitute in the formula, add the profit here. Let's do it. Let's do the calculation. How much will be the number of units now? I need to produce. It has to be equal to the 1,000 plus the 8,000
8,000.
divided by
40.
40. So if I sell 225 units, I should be able to get $8,000. So what do I know? I know if I'm selling 25 units, my income is, no, let's not select here. Let's put it here 25. And that will be equal to sales times 25 here. If I'm selling 25 units, I know my operating income is 0. Now the question is, if I'm selling here 225, is that my income is going to be 8,000? So if I
Yes.
put here 225, am I getting 8,000?
Yes.
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 So the question is, did I get what I wanted?
Yes.
Now, be careful what you want. Why? Because whatever you want is going to happen. The only matters is how much you want it. Now let's do the same thing with the sales. Exactly the same thing with the sales. What do I have to do now? Once we know that, I have to add the profit to the fixed cost. Let's get all this scenario here and flip it right here. And let's play with this scenario now. We already know if my sales are $2,500, my operating income will be 0. Now, how much profit you want? Let's increase it from 10,000 to 20,000. How much do you want?
15,000.
15,000. Let's get you 15,000. If that's how much you want, let's get it for you. So how much will be what I have to do? I have to make small adjustment here in the formula to add the profit. Make sense? And once I add the profit, I'm gonna be there. So how much is my denominator now? 1,000 plus 15,000 is gonna be 16,000 divided by 40%. So my sales should be $40,000. So let's see in the formula. If I plug here $40,000, and I know those $40,000 gonna generate me 60% contribution margin. How much will be my contribution margin as a dollar amount? No, my contribution margin is not 60, it's 40%, right?
Yes.
60% my variable cost, 40% my contribution margin. Did I get what I wanted?
Yes, sir.
We get what you wanted. You wanted 15,000, there's your 15,000. One more thing I want to show you, and that thing is right here. I'm gonna grab this information now. And I'm gonna flip it here. So we know at this point that when we're selling 25 units, I'm on break even, correct? Are you guys with me?
Yes, sir.
So now the question is, if I sell 300 units, let's say currently I'm selling 300 units. And currently my sales are $30,000. Now the question is, what is my margin of safety? Now the margin of safety is simple where you are compared to the break-even point. That's how we calculate the margin of safety. So the margin of safety can be expressed as a number of units. How many units we currently selling?
300,
300. How many units we need to sell in order to be at break-even?
25,
25. So where is my margin of safety?
300 minus 25.
This one minus that one, 275. So that's how many units I'm selling above the break-even. So now the question is, if my sales drop with 50 units, do I have to worry? Let's say my sales drop with 50 units. So instead of 300, they went down to 250. Do I have to worry?
No,
No.
No. Why? Because you're still above the break-even. Break-even is 25. Make sense?
yes, sir.
Now, the margin of safety also can be measured by sales. And again, what we're gonna have? Actual sales and sales at the break-even point. How much are my actual sales right at this moment? $30,000. How much my sales at the break-even?
2,500.
2,000. How much is my margin of safety now? $27,500. So if my sales drop with $50,000, do I have to worry?
No.
Yes. But if my sales drop with only $5,000, I don't have to worry. Why? Because I'm $27,000 above the break-even. Again, if my sales drop with, let's say, with $25,000, do I have to worry? Maybe, because I'm getting now close to the break-even. But
Yes,
if my sales drop with $35,000, then I'm in trouble.
Professor,
Yes.
what is the purpose of margin of safety?
Margin of safety is to tell you how much above the break-even you are. That's what's gonna make you sleep well at night. If you know that where the break-even is, where you are. If you know that your expenses, fixed expenses for the month are $3,000, and if you know that your income is exactly $3,000, how are you gonna sleep tonight?
Why relax?
But if you know that your fixed expenses are $3,000, but your income that you're generating is $10,000, how are you gonna sleep tonight?
Generating more.
Right? So
So
you don't have to worry about it.
yeah,
Make sense? So that's why you
yes.
want to know all the time where the break-even point is, where you are, and how
Okay.
much above the break-even point I am. Because if something drop in my sales, the question is, do I have to worry? And how much I have the sales can drop down before I start having a nightmares at night, right?
Professor, how did the break-even point go from 25 to 2500?
Sorry?
How did the break-even point go from 25 to 2500? Like that's
No,
assumed?
this is so listen this. This is number of
Okay.
units. Whether this one is sales, right? So this is only sales,
Okay.
right? We're chasing here only sales. Where here we're chasing number of units. Basically, it's the same break even. It's the same break even, but expresses as a number of units and expresses as a total sales. We're always chasing the break even as a sales and as a number of units because you want to know both. Make sense? So that's what I wanted to tell you, and that's where I'm gonna finish. Now let's see how many people left and how many people we have, and we're gonna go from here. Assignment, that's gonna happen next week. On the assignment, I'm gonna give you a case. The case probably is gonna be three pages or 4 pages depending on the content. So far, I'm gonna extend it so I can make it more explicit in terms of communications. What you can expect on the case. On the case, you should be prepared for. Let me see where the case is. I want you to be able to advise me on the type of the business. Which business is better for me? And what's the benefits of having corporation or proprietorship? Next thing that I want you to do is you to be able to come up with the cost per unit. So you're going to have a cost, and you want you to come up with the cost per unit. Once you come up with the cost per unit, I want you to find out how much is the profit for selling one single unit.
Excuse me, Professor.
Yes,
This is for our upcoming assignment, right?
that's
Or up
correct.
our okay.
So again, I want you to come up with the cost per unit. Once you come up with the cost per unit, to find out how much is the profit per unit, and then to find out if the cost increase, what's going to happen with the profit per unit. Next thing that I want you to do is to comment on the ratios. And as I told you after the last quiz, activity ratios. So I want you to comment on those ratios, to compare the ratios with the industry. That information was going to be given to you. And advise me, is the ratio okay? Is it not okay? What the ratio shows me, what the ratio means. So you have to be able to explain if I have, let's say, accounts receivable turnover, what that ratio tells me, what that means to me, and how can I improve it. Next thing that I want you to comment is on that there will be a problem with the internal control. So I want you to comment what the problem is. Out of the 5 problems. Is it segregation of duty? Is it documentation? Is it the human element? What exactly is? And how can I change the situation? What you gonna recommend me to improve the situation? Next one. I believe that's number 5.
Professor, have you shared your screen with us?
Sorry?
Have you shared your screen with us?
To screen with you? No, I'm not.
No.
I'm not
Okay.
share. I'm not sharing anything
Okay. Okay.
with you right now. I'm just talking right now on the background of the Wiley. Oh, not the Wiley. This is bright space. So the next thing that I want you to do is to come up with the cost per asset. And then once you come up with the cost per asset, I want you to then to advise me on appropriate depreciation method for every asset, for a single asset. So what you have to have in mind is what kind of asset is, which method will be more appropriate. Is it going to be straight line method? Is it going to be unit of production method? Is it going to be double declining method? So what that means is you have to apply your knowledge. I'll show you from which chapter, just a second. Not this one. I want you to apply your knowledge from the second week, chapter 4. in terms of that's chapter 6, chapter 4. In terms of coming up with the cost, when you purchase something on below the fair market value of the assets that you're purchasing. So when you have pay less and you purchase something for the lump sum. So what I want you to do is fair value is going to be given. How much you pay, it's also going to be given. So you have to come up with how much is the cost out of money that you pay, how much will be allocated for every single of those assets, and which method of depreciation I should use for those assets. So basically, what I'm telling you, the assets will be different and probably the same method is not going to be appropriate for all the assets. So you have to come up with some idea which one will be the most appropriate method. And you have to justify why is that appropriate method. That's what I want you to do. So that's number 5.
Professor,
Yes.
can you repeat the last words?
So again, you're gonna have you're gonna purchase the assets. Those assets gonna come with some value. You're gonna pay less than the value, so you have to allocate from the money that you pay, how much it will be allocated to the first asset, to the second asset, to the third asset. Based on the asset, you have to come up with how much will be what will be the appropriate depreciation method for that particular asset.
We will choose the depreciation method for
Yes,
every
you're
single.
gonna choose the depreciation method for
Yes.
all the assets based on the asset.
Yes, but for every single access or
Every single asset.
yeah, okay, okay.
There are
got
not gonna be that many, but no more than 3. Or maybe 4, just to confuse you. To see if you pay attention. Yeah, I'm gonna put more probably 4 assets. Just to see if you can think and if you can identify which method should I use for which one. Number 6 will be what will be number 6? Number 6 will be if somebody wants to invest in your company, if he wants to invest money in the company, and what will be better for you to give him? Would you ask him to lend you the money or invest? Which one will be better for the company? To increase the debt in the company or to increase the equity in the company? So you have to know what means somebody to borrow your money, you to borrow money from somebody, And what means you, somebody to invest in your company. What the borrowers, the creators, what the creators want, and then what the investors want. And if the investor wants whatever they want, how are you going to give them? That would be number 6. And number 7, I'm going to throw you some ethical problem. I want you to identify what the ethical problem is and how can you solve the ethical problem. And I believe that will be your assignment. So you're going to have 7 issue definitely. I might come up with 8, but I don't know at this point. Probably is going to leave it at 7. If there's 8 element, I'm going to tell you in the classroom the total number of the issues that are discussed, and I expect to see discussed in in your work. So now let's stop this sharing and let's go to the white space and find
Sir?
out for where the evaluation is gonna come. So your evaluation is gonna come from the chart that I showed you in class, which was where it was. That's not available for your individual assignment. Policy course. Where did we see this? So here, yes, self-assessment business memo rubric. This is from where the mark's gonna come. Can you guys see the screen?
Yes, sir.
Okay, so if you discuss all the issues, if you first we have to identify the problem. Second, you have to discuss it. Last thing, how you're gonna discuss it is you have to apply analytical approach. That means if you have to see is it positive or negative. For example, when you go to the business organization, what's the benefits to have a corporation? What's the drawbacks to have a corporation? What's the benefits to have a proprietorship? What's the drawbacks to have a proprietorship? And based on that, you have to provide a recommendation. When you do the analysis, provide a recommendation. For example, if you have to advise on if you have to recommend course for the ratios, once you explain the ratio, once you identify what the problem is, then you want to improve the situation, I expect at least 3 ways to improve the situation, 3 suggestions. Everything is going to come to the point of 3. 3 positive, 3 negative, 3 suggestions, 3 on any analysis I want to have at least 3 points. Now for the cost per unit that you have to calculate the cost. Obviously on the cost there will be just pure calculations. Once you come up with the cost, you have to once there's increase in the cost, you have to come up with a new calculation, increase the cost, and then you have to talk about what are our options at this point. Should I accept this situation? Should I not accept this situation? Should I look for where are the opportunities? How can I improve the situation? Same thing will be for the internal control. When you have the problem with the internal control, you have to identify the problem. You tell me, what is my problem? What's going to happen if I don't do anything? What's the opportunity for that person right now for realization of the situation? And then you have to provide me with at least three ideas how to improve that situation. What can I put in place to avoid that internal control? With the ratios, same thing. I want you to, so for the ratios, I'm going to ask you at least for 2 ratios. So that's going to give you the one additional issue. So you have to comment on the both ratios. Comment only one ratio and come up with the discussion and recommendation on one ratio is not going to help you. So that's going to be considered one issue miss. So if there's a 2 ratio, so then you have to provide 2 separate discussions. The other thing on the investment of the land, again, I want you to, calculation is calculation, but then when you providing, when you're doing analysis on the which method of depreciation should I use for each asset, I want you to state 3 points why this method will be appropriate for that particular asset. And what's the effect of that particular method of depreciation that you can use that effect of the depreciation as justification of your answer why you choose that particular method for that particular asset.
Sorry, sir.
Yes.
Do you have an example to we see it?
No, I don't have the example.
Okay. It's like
Uh,
every week memo that we write it in the discussion.
yes, that will be one every week memo that you're having as part of your assignment or
So
part of
it's
the.
like 300 words. It's like
No. Listen, for the memo, there will be no limits on the words. There's no 300, there's no 1000, there's no 2000. You write until you feel that you answer everything on the level. So again, if you want to get the full marks, you have to provide me the memo first. You have to identify all the problems, provide the analysis for the and discussion for all the problems. When you needed qualitative analysis, you're doing qualitative analysis, means comparing the numbers. When you need quantitative analysis, you're doing quantitative analysis with the plus, minuses, positive, negative. And then you tied up with your analysis with a recommendation. That will be the content.
So
The
just for sure, the issue is the 3 issue and 3 recommendation and 3
No, not 3 issues. Once you identify the issue, that's one issue, right?
okay.
When you identify the issue, is one issue. When you go to the discussion, if you try to go with the plus and minuses, then I want to see 3 pluses and 3 minuses.
Okay.
And if you go with the positive and negative, I will expect to see 3 positive and 3 negative. And if you see the negative, I want you to tell me how can I deal with the negative? What can I do? What are my options? Yes, this is a negative, but tell me how to fix it. And then provide a recommendation. Should I go with it or should I not?
Okay.
Right? The recommendation always going to be as a element of action. Now, on the assets, your recommendation should be go with this method of depreciation. But then you have to justify why this method of depreciation is the most appropriate for that particular asset. And then I need at least 3 points of justification why this is the appropriate method for that particular asset. Right? That's what I expect from you to see.
Sir,
Yes.
so this would be in one memo, right? All
In
the
one memo. Everything will be in one memo. So basically use the memo format. Every time when you see the problem, put it in the separate kind of discussion. And one paragraph, I would suggest you use the paragraph structure to get the depth in your answer. In the first paragraph, identify the problem. Now the second, third, and fourth paragraph, if you go that direction, you can go with analysis, positive, negative, quantitative, qualitative, depends on the issue that you have. And the last part of that section for that issue should be conclusion and recommendation.
So in the first paragraph, all the issues should we talk about all
No,
the
no, no,
issues?
no, 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 no. No, not like that. You're not identifying in one paragraph all the issues. You're going issue by issue.
Oh,
Make sense? Once you see issue, now provide the section for that issue. Once you see the next issue, provide section for that issue. What should be in that section? Once you find the issue, identify the issue, discuss the problem, see the potential outcomes, show me what will be the my impact, provide a recommendation. Then goes to the next issue. Identify the problem, provide analysis, provide conclusion or recommendation, then move to the next one.
Okay, so all issue in paragraph 1.
Sorry?
So all issue is in paragraph 1,
No,
the first paragraph.
no. Again, not all the issue will be in the first paragraph. Again, once you see the problem, start working with that problem. That problem should be followed the following structure. Identify the problem, discuss the problem, provide conclusion or recommendation, move to the next one. Identify the problem, provide conclusion or analysis, conclusion or recommendation, move to the next one. For example, if you have to choose between the corporation and proprietorship, identify the problem. You currently ask me which one will be more benefit for you to provide corporation or proprietorship. Analysis part will we start. If you decide to go with the corporation has the following benefits and listing three benefits. If you decide to go with the proprietorship has the following benefits. If you go with the corporation, however, you have to keep in mind that they also have drawbacks or negative parts. The following are the three negative. Same thing with the proprietorship. So based on my analysis and based on what your needs are, I will recommend you to go with the corporation because with the corporation you can achieve this and this and this. My recommendation is choose corporation for your capital structure. And then we're going for the next one. Currently, your ratios are this and this and this. This ratio is below the industry. This ratio is beyond the industry. First ratio, which is below the industry, let's say profit margin. Profit margin simply shows you how much of your profit you get from the sales. In your case, the industry gets this, you're getting that. In order to improve that ratio, you have to do this and this and this and this. My recommendation is do something. Second ratio that needs attention is let's say the accounts receivables turnover. Accounts receivable turnover is below the industry. Now, accounts receivable turnover is affected by current portion of the accounts receivables and the credit sales. In order to improve that ratio, either you have to cut the credit sales, either you have to improve your accounts receivables. My recommendation is to improve the accounts receivables is this and this and this. To improve the credit sales, to reduce the credit sales, my recommendation is to do this and this and this. And move to the next one. Next problem is you have purchased land and this and this. The purchase price was that much, fair value is that much. So we have to, in order to properly allocate the amount that you purchase, you have to do this and this. And keep going. And then going to the next point. Make sense?
We have one case, yeah,
You have one case, yes.
but a lot of issue in that case.
I already told you there will be at least 7, maybe 8. On the ratio, if I count every single problem with the ratio as a separate issue, that's going to increase the number of the problems, yes.
So maybe 7 or 8 issue in one study case.
In one case, yes.
Yes. Okay.
Professor, so for each of the different things that we have to calculate, do we have to follow the memo format for each one or
The
just the
memo format
paragraph?
is for your entire work. So the memo
Okay.
format, you're going to put all those things in the format of memo. So that what that means is The memo format, as you already been comment with you, is once you look at here on the bright space, actually we're still staying here. Let's go to the course outline. And if you go to the individual case, you can see the simple sample of the business memo here. So technically, once you put on your memo, let me see if this page is gonna, here we go. Can you guys see my screen?
Yes, sir.
So once you put this one, your memo has to have memo to who you address it from, you, date, subject line. And I told you, the first line that you can put on the memo, the following memo will discuss the problems currently found in your company. And first problem. And you go with the first problem. In the identify, provide recommendation. Second problem. You see it with, you can use subheadings for the problems. Ratio analysis. And start with the ratios. First ratio, this ratio, separate, boom, 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 and keep going, keep going, keep going, keep going, keep going. And the very end, thank you for your time. And that's it. Memo's done. You don't have to make a separate memo for every issue. All the issues are discussed on one place, on one document, which is called simply memo. And that's all. Check for the memo format. Now the thing is that APA guide is not, APA format is not going to be followed for this assignment. This assignment is more like on the business communication rather than following the APA guide. So you don't have to worry about that one. But you have to worry about spelling mistakes and grammar and everything like that. So again, if you want to have the full marks, you have to go with, you have to identify all the problems, you have to discuss all the problems, provide recommendation for all the problems in the same memo. Memo has to be well structured, have the necessary elements in the nice format with the paragraph structure, with the subheadings, with everything which is nice and easy to follow, fully developed, and no grammar issues.
And can we use our laptop or it's on pen?
You have to use the laptop. So next time come with your laptop. The memo is not on the paper.
Okay.
You're doing everything on the laptop. Everything is done on the laptop. If you don't have a laptop, I don't know what you're gonna do. You're doing on the laptop, and then at the end of the class, you're submitting it into Brightspace. And the Brightspace, the place that you're gonna submit it is gonna be under the assignments. Once you go to the assignments, you're gonna see this individual assignment. As you can see, the due date is already set up February 21st. You're gonna come here and you're gonna make your submission. By 10 o'clock, you have to make a submission. Because after 10 o'clock, what will be that submission site will be disappear. So you have to make the submission here.
So on that particular day, it would be just a memo, no quiz, right?
Make sense?
Hello?
Professor,
Yes.
in the business memo that any case that we need to create some assumption for that business memo, is there any chance for that?
Sorry. So can you repeat the question, please?
I want to know that is there any chance that we have to create some assumption for the business memo?
What do you mean?
I think that sometimes that we have, if we don't have enough information in the topic in the case study, and maybe we have to create some assumption.
Assumptions? No, I don't want you to have assumptions. I want you to have a knowledge, to apply your knowledge. So far, you have enough knowledge And I believe I give you enough information today on the issues that's going to be. So make sure you get the knowledge. And if you have to make assumptions, then I'm going to start making assumptions about your marks. There will be a specific problem which I want to be solved. And I want you to use your knowledge to solve the problem.
Okay.
Okay. I want specific analysis to be related to the problem, not to show me the way you show me on the quiz how much you know about depreciation without you, I mean, not you, but the most of the people, how much they know about the depreciation without comparing the numbers. That will be irrelevant discussion. I want to see the numbers. I want to see when you're comparing something, when you're having discussion based on the numbers, they have to be comparison between the first you find the numbers and then start comparing the numbers. And then provide a recommendation on one or another.
Professor,
Yes,
we have to do calculation also.
yes.
Like we have to submit that calculation.
Calculation will be part of your memo. So whatever you do
Uh,
on the Excel spreadsheet, copy and paste it on the Word document. The memo will be
mhm.
submitted only in the Word document. If you have to do separate calculation in the Excel spreadsheet, you can easily copy the part of the Excel spreadsheet and paste it in the Word document. Make sure you have, again, make sure you have your laptops. Make sure you have, if you need a mouse, you have your mouse ready. Bring those one in class. I'm gonna send you probably email since you're asking me about this. That means I want to avoid all the confusions and everything like that. So I'm gonna send you email for the next time you to make sure you bring your calculators. Because again, if you don't have a calculators, you won't be able to do anything. And then you're gonna start asking me, can I go to the library? And I'm gonna say, yes, you can go to the library, but that will be too much stretch.
You mean for your quiz or for individual assignment?
Next time you have to do assignment, people. Next time in class, on Friday, I'm gonna give you a case and you have to do a memo. Now,
So for calculating, can we use our phone or our laptop's calculator?
you can use the laptops as a calculator. You don't need a calculator to do the calculations. Use the Excel spreadsheet for the calculation, then copy and paste your calculation in the Word document. Because if you're using your calculator for the calculation and you make a mistake and you don't give me that thing, your answer will be wrong. If you want to get the marks again, you better show me your calculations. The only way you can show me the calculation, it will be on the Excel spreadsheet. Any other questions, people?
Professor,
Yes.
you told that about the corporation and proprietors that after we know the problem, then we have to choose which one is better. Yes.
Yes.
And then after choosing that, then do we have to mention the both positive and drawbacks also?
I mean, if you want to get better marks, if you miss some other points, yeah, you can do that. That I'm gonna leave it to you.
Okay.
So the last thing that we have to discuss is if you're there at the classroom at 10 before 8, I'll be there and I can give you the case. So you can read the case and at 8 o'clock you can start typing. There will be no typing before 8 o'clock. But I can give you extra time to read it. If you're planning to be late, I'm not gonna give you extra time for reading. But if you're 10 minutes before the start of the test, you're gonna have that extra time.
So, Professor, there would be no quiz on that day, right?
Sorry?
There would be no quiz on that day. It's only the assignment memo, right?
Assignment memo, yes.
Thank you.
Okay, any other questions, people? Okay, if there's no other questions, thank you for today. I'm gonna post this recording, obviously, and you're gonna have it available.